Hey there you guys, welcome to the video. Today I'm going to talk about a company that may or may not have surprised you as its valuation exploded in the past year. I'm talking about Tesla today, and I'm going to analyze everything in the company from its history to its investors, its competitors, their technology, the future of the company, and many other details about them. With that, we can make better decisions on whether it's still time to buy, or maybe it's a little too pricey right now and it's not really worth that much. Anyway, with that being said, make sure to give the video a like and subscribe, and we can begin with the video. Okay, now let's take a look at the history of the company, and I'll be brief about this because it's not that important. There's the obvious things like Elon Musk, the CEO of the company, and other details like that, like they sell cars and stuff like that, but here's a couple of details that you may not have remembered, like when they released their first car. Their first car was released in 2008 and was the Tesla Roadster, the first generation. Then right now they have 4 models that are selling. The Tesla Roadster doesn't sell anymore, although they have released their concept and their development of the Roadster second generation. That has not come out yet. Right now, in production and for sale are 4 models, which is the Model S, the Model 3, the Model X, and the Model Y. Now there are variations of every single one of these cars, like the Model S Plaid and things like that, but essentially these are the 4 models they are selling right now. Tesla began to rise rapidly in the stock market in the past couple of months, about a year ago, and the company did a 5-for-1 stock split. This means that they split their stock from every 1 stock to 5 stocks. So if you owned 1 stock of Tesla, you were going to get 5 stocks because of the split. And this was done in August 31st, 2020. It was likely done to make the price of the company seem a little lower and thus attract more investors. Now because this 1-to-5 stock split means absolutely nothing to the fundamentals of the company, because every share just increases by 5, reducing the earnings per share per stock and all of the metrics. So it's really meaningless. Okay, now let's talk about investors. And when I talk about investors, we probably all think about ARK with Cathie Wood and her price targets because, well, for one reason or another, she's become very popular with her predictions in the stock market. ARK Investment in 2018 predicted that Tesla would hit $4,000. And technically it did. Before the 1-to-5 stock split, the stock would have hit $4,000 in January of 2021. They reached over $800. Multiply that by 5, that is $4,000. So she was correct. The stock did reach $4,000. But is this a bad thing? Does this mean that we've reached its height? Well, not quite. In fact, she expected this to happen a lot later, and there's just so many other things that are happening. In fact, Cathie Wood has now stated that she's going to be updating her price target to accommodate for new technologies and new information that they've acquired, especially because of the automated driving. However, we'll talk about more about the automated driving later in this video. So the price target right now is $7,000. However, it's going to be updated, probably going to be higher than that for ARK Invest, and I'll definitely make a video updating when that comes out. Okay, so that's the most popular, but who are the biggest investors in Tesla? The largest investors in Tesla is the Vanguard Group, owning 5.7% of Tesla, Capital Research and Mortgage Company owning 4.8%, BlackRock Fund Advisors owning 3.12%, SSGA Fund Management owning 3.12%, and Bailey Gifford and Co. owning 2.8%. And those are the top 5 investors in Tesla. Okay, now let's talk about their competition. Now, the car industry is very, very, very competitive. But Tesla argues, many people argue, that they aren't a car company. They're a technology company. And I agree with this. They are really different from any other car out there. However, they may not be so for long as advancements are made with other companies like Volkswagen, and even new companies like NIO, Lucid Motors, and many, relatively new. They're not new, but relatively. Lucid is more new, but these companies are developing their vehicles extremely fast and catching up to Tesla at an unprecedented rate. Tesla's still ahead of the game with their technology, especially since they've collected so much data from people driving their vehicles already. They're likely going to be the first to come out with the new innovations, and they're probably ahead of the game by quite a bit on most of them. Nonetheless, they still have quite a bit of competitors that are gaining on them. The competitors that are their main competitors are Lucid Motors, NIO, General Motors, Ford, Volkswagen, and there are many, many more, like, I forgot the name of them, but I mean, I'm not even going to talk about Nikola. We know what happened there. But there's other companies like Amazon that's partnering with many other companies that are developing vehicles that are completely autonomous, that don't even have a steering wheel to drive them, and many things like that. And I believe that the market is going to get only more competitive. And if we take a look at their 10K filing on the SEC, we can see that even Tesla acknowledges that the market is very competitive, and it's only going to get more competitive, especially as new people move in and existing companies focus more and more on their EV technology and automation. Okay, now let's talk about the technology that Tesla has. Tesla has some impressive technology. So, we probably already know about their self-driving technology. They can drive down the road autonomously all by themselves. And they've had that for quite a while now, and it's quite impressive, and it's only been improving over time. However, they're working on full autonomous driving, where it turns corners, stops at red lights, waits for pedestrians, merges to the highway, and does everything from point A to point B all on its own. And this is very impressive, and right now they're still developing it, it's still in process, and it's already being tested, and it's quite impressive what they're doing with that. Tesla also has used their technology in their vehicles to add a lot of functionality to their vehicles, like defrosting, Sentry mode, I don't know what it's called, dog mode, where it shows, on screen that, oh, my odor's gone for a second. That's really interesting. They use the cameras to protect the thing. They have valet mode, and I'm sure that they're just going to be adding more and more features over, wirelessly, just updating the car, which is crazy. I mean, 10 years ago, we would have thought, come on, updating my car? Why would my car need updating? But it's gotten really cool. Anyway, there's no doubt that this technology is going to continue to be better and more impressive, and we're already seeing some very impressive things there. Okay, now let's move into talking about Tesla's valuation. Now, this is very hard to do. A company's valuation is based on so many things, and it's really hard to value a company because, how do you value a company? Do you value them on their future potential? Do you value them on what they're earnings today? And there's just so much to go about, but I can share a lot of information that could give you a better idea on what the company is worth, what they're doing, and their potential. So let's take a look. Well, we could see that the company has total shares of 959,853,504 common share stocks outstanding. They also have a total revenues in 2020 of $31 billion, which is pretty good. That's a 28% increase over 2019, which is significantly more than the previous year to 2019. So that's overall improving. Also, total gross margin has also increased from 21% in 2019 to 26% in 2020. Their gross profit was $6,639 million, and their net income was $721 million. So the earnings per share is around 64 cents. Although that doesn't really mean much. We often look at earnings per share kind of as some sort of metric, but I think that not everybody realizes that earnings per share is not that important because not every company out there has the same amount of shares. Tesla has 960 million shares, but the next company might have 40,000 shares, which is significantly more. And they might have earnings per share of $1,000. Might seem ridiculous, but it's really meaningless because it's all dependent on how many shares are out there. And you could do some comparisons and comps with other companies by making the equivalent earnings per share, but overall, this number on its own is not that important. But we can see that their earnings are increasing. So this earnings per share is only useful to compare it to the previous year. We can see that the previous year they lost some money and now they're gaining money. There we can see that there's an improvement. Otherwise, we could also see that their earnings are going up, their revenues are going up, their margin is increasing, and overall the company's heading in a really good direction, especially with their new technology, their research and development, and the company so far seems really attractive. So I want to ask you guys a quick question. Would you like to see a longer format video? In these 10K documents of the yearly earnings, there is a ton of valuable information, and I cannot put it all into this one little video. However, I think it would be interesting to go over the entire document, talk about all the most important things, as I have already read the whole thing, and maybe that would be interesting and valuable to you guys. It would take around 30, maybe 40 minutes or more, but let me know if you guys would like to see that down in the comments below. It would be a super in-depth analysis of the company, their earnings, their threats, their opportunities, and what they're doing. So make sure you let me know down in the comments below, and make sure to subscribe so you don't miss that video when it comes out. And also my updates on the stock market and things like that. Now I want to talk about a couple of things that I actually found in their 10K. I found out that they do a couple of things that I wasn't aware of, and you may not be aware of these things either. But the company has some other streams of revenue and some other things that they're doing that are interesting and we should probably know about. So Tesla actually takes in trades for purchases on a Tesla vehicle, whether it is or not a Tesla vehicle. So you can take your Ford vehicle or your Honda or whatever you want, and you could trade it in for a Tesla. I didn't know this, but yeah, Tesla does that, and then they go and sell the Tesla. So they have another area where they sell used Teslas, and the vehicles that they get that aren't Tesla, they send them out to a third party, and the third party sells them. So another thing is that Tesla has some commercial customers. Now, if we think about them, they have their electric vehicles, their solar wall, their power wall, and a couple of other products like that. But all of these products are direct to consumer. They are for the consumer level. But actually, they do serve the commercial markets. So Tesla has their power pack for commercial, industrial, and utility companies, and their mega pack for also commercial, industrial, and utility companies. So this is quite interesting. I did not know they had this, and it's interesting to see that they are also fulfilling the needs of commercial customers, commercial clients. So that's a positive for the company overall. Another thing is that Tesla's preparing to manufacture their own batteries, and this is because their suppliers, they're dependent on suppliers, and their suppliers are just not capable of producing enough batteries for what they need. Right now their main supplier is Panasonic, but they're having some issues there with yield, and in order to ramp up to their plans, they need to find either more people to produce these batteries, or they need to start producing their own batteries, which could make the company more, it could increase their margin, and they could be more profitable with that. So it's very likely that they will be doing this. However, they do state that it is very, very expensive, that it would require a lot of investment, and it's still under consideration whether they will or will not do this. All right, now let's take a look at some final thoughts. And at first, I just want to say there is so much to consider when it comes to analyzing and talking about a company, and there is a lot of things that I've left out of this video, but I tried to put in all the most important things and things like that. So anyway, the company is a very compelling company, and I think they have a lot of potential. Now, first of all, this is for entertainment purposes only. Nothing I say in anywhere, any video or anything is for investing advice, and this is only entertainment and nothing more. With that being said, Tesla has a lot of potential, especially because of their automated driving technology, and this is going to be a massive change. However, Tesla has a lot of road bumps ahead of them, and there may be disappointment in the short term, because a thing that they talked about in their 10K is regulations. Many states and countries prohibit completely the use of completely autonomous vehicles. So a lot of these autonomous vehicles from Tesla, once they do come out, once the technology is perfected, they won't be able to use them in certain states and certain countries. And this is going to be a serious roadblock for them, and may delay the release of complete autonomy when it comes to driving. But eventually, I think things will change, and slowly they'll realize that this is the next step in transportation, And these regulations will have to come down eventually as they realize that this technology is reliable, safe, and in many cases, probably even better than human drivers. So nonetheless, I think in the short term, it's going to be a bit dodgy, a bit volatile, but that's only a possibility. Maybe the love in the company, because Tesla has a following like no other. They have brand loyalty like no other. And that might be enough to sustain the company with a strong valuation until they're able to get through those hurdles in the future. Nonetheless, it is a possibility that it causes volatility in the market and things like that, but overall, in the long term, I'm almost certain the company will do really well. Tesla is becoming more profitable, they're holding more cash, and their assets to liability ratio is getting better. And overall, the company is improving significantly. And this past year in 2020, despite COVID-19, they've made some incredible improvements and gone from being negative to being positive, and now they're profitable. So there's some really impressive stuff going there. And right now might be the perfect time to buy some Tesla if you're interested in it. I bought some Tesla on Friday. Who knows how it's going to go when the market opens, but now it's down 32% and it's just a perfect time to buy. I bought as much as I could, and I believe in the company. I believe they're going to succeed, and I believe there's a future there. Now again, just want to end on the thought that if you guys want to see a longer format video where I go far more in depth into the 10K and other documents and information about the company, make sure to leave it down in the comments below and subscribe. Anyway, with that being said, give the video a like and make sure to subscribe, and I'll see you guys next time.